Anybody here never seen one of these TPO profile charts before? Just so I can gauge. I do this every profile 101. I know it's a bit of a pain, but has anybody here never seen one of these charts? Has anybody here never seen a market profile chart? Because it sort of lets me know where I can start. Everybody has? You can message me if you haven't. It's not a big deal. Okay. Okay. All right, Glub. Well, we'll start really at the beginning. Profile is just a way of organizing the order flow or the transactions in a market so we can actually trade the market intelligently because we know where the large players, what they're doing, and what their intentions are. All it is really, hey Adil, all it is it's a distribution curve like you would have had in high school in stats. It's a bell curve that we flip on its side to see where all the action is. Now, I'm just going to go through this really quick. The value area, right, is where 70% of the volume takes place, the trades or the time. We use volume, right? We look at volume and time, right? So my charts are going to look like this, okay? The blue area is the value area. That's where 70% of the volume takes place. This is the actual volume profile, which shows where the recorded volume takes place. These profiles have what they call a point of control, which is an area within the value area, excuse me, where 70% of the time or volume takes place. So we look at both. We look at the time point of control and the volume point of control. And when they move away from each other, that gives us some information. It tells us where the majority of the trading takes place. When we get away from that area, we usually come back to it on both sides. This profile is the way this is shaped is a common bell curve where you have what they call excess or letters by themselves at the top and bottom of the profile. And it's kind of a balanced distribution. That's the way we sort of look at that. So we have the value area high, value area low, the point of control, the close. This little white letter is the middle of the profile, the middle of the range, top, bottom, middle. And then this is that little red triangle that we watch move. And that tells us the price. So, the profile basically breaks down the way price moves. So for example, in this particular example, oh, come on. In this example, the market opened here at 91.25, went down to 9100. The next letter period opened and couldn't get down to 9100. So what we do is we use this to take trades. We do something called structure trading, right? We trade the structure of the profile. Now, people who've been with me in this class have seen this a million times. So what happens is how we trade this is we look, say we wanted to take a long. If we see a situation like this where this period can't take out that low, you look to get long somewhere, right? Then you put your stop at the low of that half-hour period. These are just like a half-hour candle. That's all it is. So every time there's a transaction, they put an A. If somebody buys something and sells something at 9100, they put an A there, 9105, the same. So what it does is it lays out what we call a structure. So when we see a structure like this, we know that we can get long, put the stop at the lower point of this structure, and then we'd look somewhere up here for our sell order, right? We also use profile to tell us that the stops in a market would be at the A high, and if the market ran those stops, would it run those and continue or run them and come back in? In this case, it ran them and came back in, right? So what we do is we put our sell order somewhere close to where the stops are. So we have our entry, our stop, and our exit. It gives us a place where we know where we're going to get out. Does that make sense to everybody? Okay. So this is what we call a structural trade, right? And the same thing we would do on a short, okay? Say we saw this excess in B period. So B period took out A and then C opened and C couldn't get up into this area. We would take that as a short signal and short, right? And our stop would be in this area at the top of C. And then to cover, you'd always look to cover at the open, right? That's the first sort of target, right? So what these structural trades do is they help us because if you're short and the order flow comes and takes out the high of A, for example, right, where the stop is, you don't want to be in that trade. That's just that's the order flow being too strong and it'll overwhelm your stop and take you out. So what the stop does in this type of trading is it does two things. It insures your account, and the other thing is it tells you information, right? If the market does take your stop, right, that means that you potentially misread the buying strength in that market. That happened to me today, right? I took a short, right? I saw it before it even got to my stop. I closed the trade because I knew that the market was going to go take my stop just by watching price over and over and over again. Now, we have things that we can use in market profile trading that can give us really, really good information. One of those things is something called a poor low. Now, a poor low is something that we see sometimes when a market will sell off, much like it did today, and sometimes the market will sell off and the selling will just shut off. And we'll see that by just one tick of excess at the bottom of this profile. You see, this thing that we call excess at the top and bottom of the profile, they generally tell us if the trading has completed itself or come to a natural conclusion. So here you see excess at the top and you see volume getting less as the market goes higher. Here you see no taper, you see a poor low. And that generally means that the selling has shut off like a switch. And when you see a poor low, that's something that you don't want to short against, right? Because the selling has shut off. So most of the time we will take a long against a poor low. Does that make sense? Selling shut off, right? It's just because in a market, say there's 50,000 contracts for sale, right, at a price, and they sell and they sell and they sell and they sell. Eventually, that 50,000 contracts is going to sell out, and there's going to be no more contracts for sale. That's the way it always happens. The selling shuts off because there's limited supply in these markets, and we often get things like poor structure like that, like a poor low, and that tells you that if you're not supposed to be short down there. Right? That's a place if you're short and you see that, that's where you cover. I don't know what you got a hand with a face. I don't know. I see that a lot from you. Oh, you're ruminating. Okay, well, good for you. You percolate on that. So anyway, the selling shuts off at a level, right? Because the order flow just shuts off. There's 5,000 contracts for sale. They sell out. That's it. The size traders come in and buy those, right? Then the market goes right back up. These things can tell you very quickly what's going on in a profile. Other things happen, like for example, today, right? When the market broke over the overnight high, we had this massive, massive spike at the end of the day. So now today in Globex, what we're going to do at the Globex is the night session, is we're going to watch and see where in this spike price will be accepted, right? This whole massive spike from 45.15 and a half all the way to today's high at 54 is a price spike. And we'll see where that gets accepted during the night, right? There's certain things that we'll look at when we're trading that profile can really, really help out with, right? Especially after days like this, where you have massive, massive ranges. You can look at a market and say, oh, gee, is it getting too short, right? You can take a look and say, oh, hey, look, there's also something called one time framing where every single day is higher. This is what you guys would call a trend. And the shape of these profiles very much help when you're trading these kind of days so you don't get trapped short, especially if you have a gap or something like that. Or, if you're expecting the price, after a sell off and you come back over a certain level, right? The profiles will tell you if the selling is shut off or if there's going to be further selling like we did have here last week. Does anybody have any questions? I'm going to stop for a second because I just take a quick. I consider the whole thing from 45.15 up a spike. Technically, they might just consider it M period show, but I would consider this whole thing a spike. Being accepted is time, Stoney. So let's take a look on the longer term scale, right? If you looked at 47.40, you've got the market goes above it and it stays above it for all these trading sessions. So for these trading sessions, it was accepted. Now, in a short-term time frame, right? Being accepted is up to your time frame. So if you are in a short-term trade, right? Say you bought that G low here today. Well, price was accepted over 44.94 for all day, right? Oh, you could use TPO for everything. Here, let me take you down a quick road. Here's Google, right? You could use it for Google. You can use it, for example, here. This is what we call a P-shaped profile. Here's today's trading. Here's yesterday's trading. Okay, just going to take out the overnight sessions. Okay, so yesterday we had a P-shaped profile, right? Yesterday was the end of the month. Apple rallied, right? The shape of this profile is very interesting because what it does is it tells me that the shorts are trapped at under $172 a share. Does everybody see that? So today when the market traded and it came down to where the shorts were trapped, it was automatically bought. Can everybody see that? It's very, very clear here. You see that, Glub? Anyone there? Yeah, so how do you know the shorts are trapped? Because every time the price came down to 172 quarter, it was immediately bought, right? And in markets, as soon as a market starts to fall, the first people to start buying back are short sellers. They stabilize the price, longs see price stability, and then come in. And as the longs and the shorts compete for product, the price goes all the way back up. Yeah, exactly. I was. The logic is that there are people short when the market moved from 2 days ago. They continued to add in short, and every time the market comes down here, there is a pool of buyers waiting in this area to buy whatever is being sold. This also tells you the size of the selling ape. So, say you were going long, right? I want to go long Apple today, right? Where's a good place that I can buy it? Well, I know that there's going to be buyers at 172, so I'll try and buy it right before 172. Does that make sense? So you take advantage of the shorts that are covering to jump ahead. Yeah, you front run that buying. Because as a trader, your job as a trader is to know where the buying is and where the selling is and jump in front of it. Now, stony acceptance means if you're in a swing trade, it means a day or two, depending on how long you're holding it. If it's an investment, then it could be months. If it's a 5 minute trade, the price doesn't have to be accepted for long for you to get in, get out, and get paid, right? So acceptance depends on the time frame that you are willing to hold that particular transaction, right? So in this case, people who bought 172, you know, maybe it's just for the afternoon, right? So there are a couple of things about this type of chart. It'll tell you that there are buyers here. It'll also tell you that when we got down here, we didn't have the selling volume, the amount of sell orders to fill all of these buyers. Otherwise, the price would have transacted down here. The fact that we stopped cold right here means that the supply ran out right at 172 because there are people waiting to buy and they cannot get filled. Subsequent attempts to get down there couldn't even get down to the bottom. Does that make sense? Right. This is a really, really cool concept that we can use, right? Another thing that we have or used to have is a B profile. See where the market see the market moves up and then it goes sideways and then sells off, right? Exactly. If it's the same time frame, right? It depends if you're day trading or swing trading coffee, but if this would just be half hour candles, right? The thing is, these things lay out a shape. Like a candle chart's not going to lay out this kind of shape. So what happens is, for example, here's a really cool example of where you shouldn't short a market. Market goes up over 178, balances between 178 and 180, and then it sells off. But do you see the shape of this profile that it sold off into? That's what we call a B-shaped profile, right? And a B-shaped profile, the traditional market profile people call this long liquidation. But what this is long liquidation into a size buyer. And because we don't have any excess, that is a poor low. So right at that poor low, the selling has shut off. So what has happened is this inventory, right? Some of these people are holding, but the ones who sell have sold off into this buying by size traders. They buy that. The next day, the market is back up. You see? Now, you don't automatically buy that and think it's just going to go. You have to monitor it for continuation, right? But this is a perfect example of how momentum traders take advantage of longs when they sell out. They accumulate that position and then take the market higher to sell it, and then sell it again. And then, of course, we had this down day. But does that make sense? So you have a B-shaped profile, which is when markets accumulate. And if you see a bunch of those B-shaped profiles stacking up, you usually get a higher move that's more sustainable. So combined with that, you can also build out levels. Like for example, if you use this as a balance level, 178 to 180, when you break out from that, you can double it to the downside or the upside to see where your targets are going to be, right? And that's basically what we do all the time in market profile trading, right? You'll have a balance area and then you'll break out from it. And when you break out from that balance, you just simply double it. I'm going to stop and let you guys ask some questions here. We like to use it in a practical method, right? Market profile is it's a great tool, but sometimes it can be a little bit used in a scholastic manner. We like to show you what it's going to do in the real world, right? So, for example, today when we were trading, we saw a few things that were interesting. We saw the market when the market liquidated E period, sorry, when the market liquidated in F period and G period, do you see how that E and that G low were exactly at the same price, right? That tells us that the selling shut off there. And I was very surprised that that low held, but in fact it did hold. And look at the move up off of that low. And then when that low didn't take out that low, you know the trade is to the long side. It's very, it's a very visual way of seeing where the buying and selling shuts off. Now, Francis is talking about settlement. Settlement means just 2 days ago. Okay. So the trades that happened on Monday in the equity markets will settle tomorrow. It's T plus 2. It's like a check going through the banking system. So tomorrow, the T plus 2 high will be up here because this is Monday's trading day. Where did we close? The T plus 2 close will be somewhere around here, I think. And the T plus 2 low is here. Now, what is T plus 2? What the big thing about it is, if we sell off tonight and the market opens underneath 4,400, underneath that settlement low, the people who bought on credit will face what they call margin calls. So when a market opens underneath the, the low of 2 days ago, like we did here, you could expect some selling, right? When the market doesn't hold settlement, you can expect selling. Does that make sense? So if a market holds settlement, you could expect there not to be as much supply because there's not as many people who are forced to sell. So a market that holds settlement are ones that you can take longs in with more reassurance. A market that's not holding settlement, Francis, will have some more selling. So you have to um, monitor your expectations when you're taking longs because you expect more selling. Does that make sense? Hey, Sixfold. Yeah, it's a credit term, and we don't deal with T+2 so much because we're retail traders, and the money that we trade, we have to have the money in our account before our brokerage firms let us transact. Large institutional traders have what they call prime brokerage accounts. They get extended credit, and the firms that they deal with allow them a lot of leniency with credit. But if the market doesn't hold T+2, we'll see some selling. Oh, that's cool. Does anybody else have any other questions? Anybody is there anybody who's completely, I don't know what this guy's talking about? Please ask. I've been a little takes a while. Cool. You might as well ask now, Stody. Most of the folks in here know what a profile chart is. Now there is an index of glossary terms that the shadow trader folks let us use. So people, when you hear about things like, um, you know, one time framing, that's a market profile term. Poor lows, poor highs, excess, all of that stuff you could find in the glossary there. Right. What I use profile really mainly to do is to tell me where I can expect buying and selling. Now, in a situation like this, I find it very odd that we've opened the second period and we can't seem to get down underneath 44, 45, 45. We'll see, right? I don't have time to type these up, Stony. I think that's why I gave it to you. What am I, a secretary? There's the link. Just click.
You know you have to you gotta click it, read it, click the next one, read it. No, it's all good. Hey, so my question my question is through all of your on your chart book, can
Yeah.
you go just break down from all of them and just say what you use each one for? Because I'm having problems organizing. I have 3 screens and I'm having problems organizing them.
Okay.
Um,
Like, so what do you mean? Like,
yeah, so this is I know this is the main one you watch price at. Okay, so the the other charts that you use, is that the daily? What information does that give you?
the daily? Oh,
I don't whatever all
oh,
the ones you
this,
go
yeah.
through.
Oh, okay. Well, this is just a kind of where we are in the zoo, right?
Okay.
It's just when I look at a chart, the first thing I do is I look at inventory. Okay. Now, you guys, inventory is the most important thing in trading. So when I looked at this chart a couple of weeks ago and we broke this level, I went, "Oh, wow, look at this." Right? I'll show you how people who sell a lot of stock think, right? You look at it and you look at the chart and you go, "Wow." Ever since sort of this time in this area, look at all the inventory that's trapped over 45, 46. Look at that. All of those people are trapped. Okay? And where are the swing lows? So there's a swing low here and a swing low here. So when the market comes down and takes out those swing lows, all of this candy is going to fall out. That's how I look at a chart, right? I look at this as inventory of people holding a position that if we take out their swing lows, they will puke that position. And that's exactly what happened. And in a market that doesn't have continuous selling from outside influences, right? They don't have investors selling. Then what happens simply is after that position is taken back, it's taken back up and sold here. Then it'll come back down, clean it up, and then go back up here, right? So this is what I look at. Are they taking losses? Exactly. Of course they are. I mean, if you were long 46.87 and you didn't sell out in this move, as soon as that swing low gets taken out, good night, Irene, right? That's how I look at a candle wax chart, right? And it allows me to go back over time and see exactly where inventory is. The other thing about the wax chart, on a daily, I can look and see the business that's transacted, right? So every time the market sells off, sells off, sells off, right? I look to see how much time it's above this level. It sells off, it can't crack that level. I know it's a long. It goes up, it spends time above 41.24. It sells off, it takes 2 days to clean it, gets back up. There's still some inventory here. See? There's still an area of inventory, right? Because there's been time spent. So it's going to take more than a day to clean all of this out down here, then back up, then clean, then back up, clean, back up. It's the same thing over and over again. And that's how these markets work. And this is exactly why we got the same thing, but with much bigger ranges, right? Because we spent all this time over that 4,500 area. See? So we were above there since October till January, and it took a week to clean. Now, I know this isn't Profile 101, but this is how to think like a trader, right? Because as a trader, all you really need to know, if there's supply, you can short. If there's no supply, there's no reason to be short. And that's how a lot of traders get into trouble. They will short because they are completely unaware that there's nobody selling anything, right? It's one of the most simple things that's never ever talked about. Why would you sell something in an area, right? Why would you sell something right here that you don't own in an area where the people who actually own it have no interest in selling it? How's the price going to go lower? It's not, as we've seen, right? It's a way to keep your head in a market, right? And you would call that situational awareness or market intelligence. And that's what because we're retail traders, right? We can't go, I can't say, Stony, I don't like this market. Go move it 20 points, right? We don't have the ability. We're not dynamic traders who move price, right? We catch the ride. So when you're doing that, you got to make sure that you got the bus schedule, right? right? You're going to LA from from Los Angeles to Bakersfield. You better get on the right bus. We're not driving it. So we spend most of our time figuring out, do we get on this bus or do we get on that bus? Long or short, right? Why I think I always think in function of being long, John, is because uh, I was a distributor of stock, right? And a market doesn't, like, there's no market in the world that is based on shorting. A market means you buy a whole bunch of crap at a really cheap price, mark it up, and sell it to people. That's what markets are, right? Even 400 years ago, people would take their apples and go to market to sell them, right? That's what a market is. People forget the stock market is a market, except here, right? Instead of selling apples, we're selling worthless paper. No, I'm just joking. Stock or futures or whatever, right? At the open, it's a new profile, so there would not be a shape. You use the overnight profile, Jojo, to see where the inventory is, right? And then we wait for the profile to develop. Are you with us on the Zoom calls in the morning, Jojo? Just wondering. There's some people have to work and stuff like that. Yeah. So what we do is we look at the overnight inventory to see. This is a good question, okay? Because those profiles take all day to develop. So how do we know what the heck's going on? Let me put in the overnight sessions, right? So when you have overnight inventory completely opposite, let me see here. Let me quickly see. So here's a situation where the overnight inventory was short. The close of the market was here. All the trading in the overnight was down here. So the overnight inventory was short and it went down into the, the low. The market broke that low of the overnight, got way too short, and came back and corrected that way. That's not the best example, but there are examples where the overnight inventory is long and we can take a short when the market sells off. Let me try and find one here. I'll find an example for you. Right. But when you have inventory that's long in the overnight, you will get a correction, right? No, 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 no. Long means all you do, Jojo, is you look at the trading of a day and then the trading at night. I'm just going to try and find a proper profile that shows this nicely. Sorry about that. Okay, here's a daily profile, right? Here's the day profile. Here's the day, there's the night. So you don't have to worry about the shape of the overnight profile. All you do is you look at this. So there's the close, okay? And where is all the trading in the overnight? It's above the close, okay? So overnight inventory is long. So what that means is there's a 60 to 70% chance the next day that the market will correct this off the open. Does that make sense? See how the market opened and corrected overnight inventory lower? Right. So that's why in the morning I'll come in and say, okay, overnight inventory is long, right? We're looking for a correction to overnight inventory. Sometimes it takes a couple of periods, but eventually inventory gets too long, which means traders are trapped and it's not going above 4807, so the market sells off. So we know to take a short. We know that if we have long inventory, right? Remember what I said about supply, right? So let's just take it these couple of days here. So for the market to get from here down to here, it needs supply, right? It needs to have product to sell to push price down. Does that make sense? Right? Remember the old supply and demand, right? That's where profile really helps because if the overnight session is above the previous day's close and there's a bunch of supply above there, you can expect it to correct. Now, with this market, it takes a lot, sometimes it takes a couple of hours. Ah, no. The Globex thing is what we do in Globex is we look to see where the position of the traders at the end of the day is, right? Economics classes, supply and demand. It's a market, San. If you don't understand supply and demand, you're not a trader, right? Right? If you're just trading squiggly lines, right? There's, you got to remember that all of this stuff, these are business transactions. This stuff isn't just happening randomly, right? There are orders that are being worked and those transactions lay themselves out. So at the end of the day here, the inventory of the wholesale was up here. So Susan, what they did was they took the market up to sell this up here, right? Generally, Globex is a time where the large traders, because they can't do it in the daytime because it costs too much money, they take their product and they sell that up here. That's what Globex is for, right? Or in this instance today, those large traders are going to be trying to cover. Does that make sense? Because this market was taken up on short covering, and those buyers are not going to be as present. So we're looking to see if it can leak lower and fill some of these areas. That's usually what it does, right? And then we'll use the profile to see where we can anticipate buying. So this, what happened right now, profile has a double top, which means the buyers are trapped up here, right? So a lot of people in an active market, they would automatically short that. They would short 45.50, put their stop above that double top, and then they would look for the low in S for the stops to get taken. So this is the structure right now. So if you short 50, stop 52 half, and your first target is that S low, that's a market profile trade. The premise of the trade is that the longs are trapped. That double top means that the buying stopped to the tick, right? The buying shut off. They couldn't sucker anybody more into buying over 52, right? The order flow just cut out. So you would short that, put your stop over the double top, and then use this S low. If this triangle can't get down to that S low, you know your short's not going to work, right? So if you're short 50 or 51 or whatever, and the market comes down and it stops at 48 and turns and reverses, you'll expect buying here because you know that's where the stops are and that's where the shorts are waiting to buy, right? So if you have enough supply to fill the buy orders here, this S low will drive down and then take out the R low. So that's what we use profile for. We use it in a practical manner, right? Where do you put the trade on and why? You put a short on because buyers are trapped, right? Your risk is the top of this double top. This is what we call a poor high, right? Does everybody understand that? Well, I spoke to somebody today that trades about he was long about 15,000 no 20,000 contracts down from yesterday. And then I spoke to him after the close and he goes, I only got 5,000 left. Okay? So John, most of the people who are trading in this environment, right? It's one tick, it's less than two ticks, Jojo. A double top is a poor high. A top with one tick of excess is a poor high, right? A top with two ticks of excess is a proper high. Sorry, it's a little nitpicky, right? Thank you, Susan. Right. So the people who trade, like say I was short a bunch of contracts, I would use Globex to try and cover because I'm looking for some liquidation in Globex. If I was long, right, I bet you right now he's probably, if I messaged him right now, he'd probably say he's out maybe 500 of that 5,000 contracts he's got left. So it's not just European traders. There are very, very massive traders in the States who used to work on desks at Goldman, Morgan, those places who are trading with 500, 400, 800 million kind of dollars. And they are the ones who rule the roost in Globex. I'm sure there's some European traders with size, but most of it's all US based. It's our market, right? Well, no, I mean, if you want to make 50, 100 million a month, you don't, sleep is kind of like overrated, right? How do you know in longs what is shorts covering on buyers? How do you know in longs what is shorts? Jojo, I'm getting tongue tied. No problem, John. How do you know whether it's shorts or longs buying? No, those are prop traders make that kind of money, guys. That kind of money is very, very common with people who trade professionally, right? So you're trying to figure out whether or not it's short, who's buying? Generally, Jojo, when you take a market up like this, right, you know the shorts are trapped. Why? Because of the structure of the market, right? This is not how long traders buy. If I was a long trader trying to buy a big position, this is not how I would buy it because the price moved too far, Jojo. So these are people who are trapped short. How else do I know that they're trapped? Because look, we're not getting any selling. Every time the market comes in, there's a buyer. And there's nobody buying at night. There's nobody buying to put a position at night together at the highs of a market. So that's how you know it's shorts. It's just about knowing a little bit about the business, right? That creates the chart, right? When markets go up, people short them. When they come down, those people cover, right? So they have to buy back what they sold that they don't own. And that buying back provides that stabilizing effect when price goes down. Does that make sense? Yeah, that's what these big traders do. That's what they do is they'll use, you know, they'll know that, oh, you know what? The market couldn't break 47.40, so they'll start initiating a position here, right? So they'll start putting out maybe, they'll sell 5,000 contracts short, five, five, five. They'll be short 20,000 contracts, right? And when it breaks 47.10, here they're short 20, they'll cover five, cover five, cover five, right? Yeah, I taped it. I always tape it, right? Now, I know this isn't traditional market profile, but I kind of want you guys to understand, why the charts exist. Like there's a reason why everything happens. Trust me, you put $1 billion on the table, nothing happens by coincidence, right? When there's that kind of money at stake, every, you've heard the term, every battle is won before it is fought, right? Okay, right? Because I kind of I like to do the market profile 101, but doing like this is a half hour period and da 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 da. I'm not really good at that. So what I like to do is I like to when I was learning profile, it took me a while. It's okay, how do I use this, right? So I can make money, right? Because otherwise the theoretical stuff is great, but when you see things like that, first thing I look at was, oh wow, inventory's trapped long between 47.10 and 40, right? So these people are trapped. As soon as we take that swing low, all of this candy is going to fall out. So that's what these big traders do. They'll build a short position, right? And in the daytime, they'll trade long against that short position because they don't just have one account. They'll have like 20, 30 accounts, right? Right? With big brokers. I mean, they have like $100 million in one, $50 million in the other. So they can take the responsive longs, right, off of this, knowing that this thing, if it can't break 47.40, then they'll start breaking and taking profits. Now, my buddy, he was long, I don't know, down in here, our friend, and the people who've been in the room will know who I'm talking about because he comes in the room and he talks to us every once in a while. But he was long in this area at that 43.77 all the way up to 45.50, right? So yeah, it's not really, I don't know where they get this melt up thing. I've never seen anything melt up. It's more, it's what happened was this is what happened, right? This crazy back and forth, right? And you've seen this before where the market falls and it just goes boing, 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 boing. What this does is this is like a washing machine, right? It takes out all the traders who aren't well capitalized, right? Because what happens is the market falls apart, then rips up. So what happens is the market falls and it takes all the longs out. Then shorts get short down here at 42.17, and the thing ripped and closed all the way up at 4,400. The next day, it peels off and goes all the way back down to 42.79. The next day, it rips all the way back up. So people get short down here and they get hurt. People get long up here and they get hurt when it comes down. So that repeated back and forth is almost like it's just a horrible, horrible way of taking everybody's position and everybody's money. So when you take that high, you see how easy the market went up. Look how easy it went up from 44.38 to 45.59 in 2 days because they've taken out what they call the overhanging supply. These people were trapped long. They sold out. And you see this big gap here, this big, huge empty space? That's the supply. There's no supply here. So when you get through here, the market goes right up without any problem at all. And this only happens in markets where there's a limited amount of product for sale. The double levels work really well. Like it's freaky how it works. I mean, you could use it for oil, right? So for example, now if you're a CL trader, right, we have a balance area here in CL from 86 to 88. So what you do is when this crazy thing breaks, you know where your target is, right? So you've got, here's your balance. And say if we break lower, oh, how did I do that? Whoa, sorry about that. I've never done that before. Copied the whole thing. It's just supposed to copy the box. Whoa. Anyway, if we broke lower, our target would be down here in the oil market. I don't know why it's doing this. It's really weird, right? So you'd have two of these boxes down, and that would be your lower target, right? I've done it before that way. Oh, it's got this selection thing. That's what it's on. Ah, there it is. See? I knew I wasn't going crazy. So you'd be looking at 81.40 as your lower target. Why two, not one? Because Jim Dalton said so. It's as simple as that. I have no idea. This is the simplest thing that I have ever heard in retail trading. So as soon as I heard it, I grabbed onto it like a life vest and I was off the Titanic because everything else drove me nuts. You guys have all these things, MAs, fibs, bull holding flag, raccoons holding this, upside down this, head and shoulders, Selsun blue, all sorts of crazy stuff. I couldn't figure out any of it, right? Because I made markets, I made candlestick charts. I didn't trade them. I made them so you guys would come so I could sell you stuff, right? I have no idea, right? I didn't know what all this stuff was, right? I build a chart, you guys come, I sell you a whole bunch of worthless stock, right? Life was simple. Now I've got to do this, moving averages, this, that. So I heard Dalton said, look, you take a balance area. When you break it, you just double it to the downside or double it to the upside. There's your target. I did it. It worked. I was like, oh my God, this is amazing, right? Because it was simple, right? And as soon as I started doing that, I started applying it to stocks, to everything, and it was insanely accurate, right? So what I do, like my job was to do this, right? This is what I used to do for a living, right? See, I bring you into the party and then I sell you stuff, right? This is like one of the deals that I made a market in, right? I build a chart so you come and then I sell you a bunch of stock, right? That's what I did for a living. So I don't have to analyze this. To me, this is like a party invitation. Like, come on, we'll have a good time, right? And here, you wanted stock, now you got stock, right? So I went from that to like, oh my God, where do I take this crazy trade? So when I heard this, it was simple and it worked. I was like, oh, hallelujah, right? The rest, money management and discipline, all of that stuff, I had to learn that, and it was hard. You guys have any other questions? Sorry for the folks who were looking for a traditional profile. We do things a little differently, especially me, because oh my god, this thing's breaking up. What the heck? Hey, boy. What are my expectations for overnight? Well, SJ, they just got. I don't know. Honestly, I don't have any expectations because every time I expect something to happen, I'm wrong. So what I will do is I will just let the market tell me. Now let's look at this. Okay. So we're one time framing higher, right? The top is that O high, and we got up there and we didn't quite run the stops, right? Oh, hey, Matt. So T plus two is just so the trades from Monday in equities, right? Settle on Wednesday. So if you sold 1,000 shares of Microsoft on Monday, you can get your cash on Wednesday. That's called settlement, right? So if the market doesn't hold settlement, you working tonight? If the market doesn't hold settlement, the low of 2 days ago, you can expect some selling. If the market holds settlement, then you can't expect as much selling. That's all it is, right? So if a market is under settlement, if it's under the low of 2 days ago, you can expect there to be more selling than it is within that range, or in this case, way the heck above that range, right? And that's why the market did what it did here. Hang on. You see how we did this? Every freaking day we held settlement. So that's why we didn't have any liquidation. It's one of those things, and I said on the 21st, I put out a thing and I said, when this breaks, right? I said, when this breaks, it's going to do this up and down and then back up. The absolute low of 2 days ago. That's all it is. That's all you got to worry about. Works like a charm. Yeah. Now, if the market opens above settlement, shorts will get bought in as opposed to longs liquidating, right? Like today, right? You could obviously see people getting bought in. That's why we had that big move up at the end of the day. What happens is once traders pass a certain threshold, there's something called credit and compliance. They're like the cops at a brokerage firm, and they will start telling the margin clerks, right, to start buying in certain accounts, which means if you're short at $5 and the stock's at 8, they start buying you in, and you might not get a fill till 10 or 12. That's why they say shorting is very dangerous because the risks are unlimited, right? You could be short at 5, and by the time you get bought in, the stock might be 20. John, that's not a B shape. It's not a B shape. I know what you're thinking, and you're right. No, no, it's not a B shape because it's not longs liquidating into bids, right? Well, that's what I used to do. See, when I would take a company public, I'd get the people who are the insiders of the company. I would let me build a short position into the stock. Now I'm not going to go into that, but so what I would do is I'd open a stock at $5, take it to 7, and then from 7 I'd take it down to 3, and I'd get everybody short at $3. And when I got people short at 3, then I could take the stock to 8, 9, 10 very, very easily because you use the shorts as leverage. right? So I did this once, and I took like a little bio stock from $3 to 300 doing that over a period of like 6 months. See about be safe out there. You use the shorts to drive the buying, which is fake buying. Exactly. No, I had 6 months to play with the stock, and the I had a fund that owned all the stock. My client, so they wanted me to do this because they would use that stock to market their portfolio if they were having like a bad month or something like that. So if they were having a bad month, they'd call me and go, right? And I'd start moving the stock up. I could move the stock. I could move that stock from like $20 to $50 a share, and it would cost me maybe 3 grand, right? So if they had a bad quarter, we had a bunch of stuff that they had that I could move up very very easily, and nobody knew it was me, right? It's just some buy orders coming out of Vancouver, and a fund in Europe. All of a sudden, their quarter looks better because we did a little window dressing. It's very common. If you read the buy side with Tony Duff, you'll see he talks about it all the time. It's helpful to understand how these people think and work because everything they do is based upon their bonus and their month, right? That's why month end is very important in the business. Quarter end, year end, because if you have a bad month as a portfolio manager or one of these guys who manages money, your job's in jeopardy, right? You're not really allowed to have more than a few bad. Like it depends. Most of the time, you have a bad month, you can pretty much start looking for the door, or your investors are starting to exit. It's not a business that's very forgiving. Yeah, I was a fixer. I was kind of like the Raymond Reddington of everything under $30. Whatever you needed done, I had a guy or I had a way to help. You need to hide a short position for a year, I'm your guy. You need to do a short squeeze, I'm your guy, right? Those kinds of things. Nah, not so much Ray Donovan. It was more brain work, not with a baseball bat. Although there was one time in San Diego. No, okay. Anyway, my job always exists. There's always someone lurking around like me, but you never hear about them. Algos are used for execution, right? But there's always someone pulling the strings. See you, Darce. Have a good night. Right now we're eating dinner. Really, not really much going on. Let's see if we can run that stop in O and get up to 45.59. I really have no idea what to expect. Today was a very very strange day, right? The extension on today's spike was a little nuts, just a little on the crazy side. I only trade futures, Glub. I only trade one thing, but that's just me because I like trading the same thing every day because I know it inside out. I was an institutional trader and I worked at a Canadian brokerage firm. So my job was to route offshore order flow through US institutional trading desks. So what I would do is I would sell stock that is in Switzerland and the Cayman Islands through Vancouver into the United States to people like your buddy. And they would work that order flow for me. So if you look at a level two, every market maker was my guy on a stock. And I would move the market makers around like chess pieces. And I would do that for 20 different stocks simultaneously. So it's like, those guys who play chess in the park simultaneously, like on 3 or 4 games going. right? I'm doing that with 20. So I'm simultaneously playing chess with 20 different stocks, making markets. You can use market profile for crypto. It works nicely. Well, yeah, you can like make your own coin and sell it. No, I got my job very, very differently. The story about how I got my job is it's very strange. And it probably doesn't belong on a market profile 101. I'm writing a book, but it was kind of a long and convoluted path. There's no online application. See, people like me, you don't know they exist because they're doing a good job. Anyway, does anybody have any other questions? Sorry, we've been a bit all over the place. Yeah, no. I did something. What I did was I was an executing trader for offshore banks, and my clients were insiders. So my clients would only ask me two questions at the end of the day. JJ, what was the volume? I traded 10 million shares. How much did I sell? Right? Oh, you sold three. Great. See you tomorrow. Click. They don't care about the price, right? So today, for example, on this WISH, my clients would look at that dollar volume. So this stock traded $75 million worth of stock today. I would have to at least have 30 to 40% of that money in their accounts at the end of the day. Otherwise, I'm fired. My job is to go into a market, take 20, 30, 40, $50 million out of it, and nobody know that I'm there. That's what I used to do. Not for me, but for my clients. They don't care about price, Francis, because if the stock's at $2, they paid less than a nickel for it. When you guys are buying stock, you're buying it from someone who got it at a much, much, much cheaper price. I mean, unless you're trading Apple or Google or stuff like that. But under that $20, like if you look at LCID, right? I worked with those guys 20 years ago, right? Some of the crew on that deal. If you look at TLRY, those are some friends of mine back from Nanaimo, right? So different crews, right? They take companies public and they get their stock at a fraction of the price that it trades at, right? So if a stock's trading at $10, they have their stock under a buck. No, there's no pin, San. It's all structure. That's why I use the levels. Tilray is done because they issued themselves a bunch of stock. I'll stop recording now. I could just take some questions now.